Welcome back to EDS, and in this video we're going to take a look at what we did in our small portfolio over this past week. We're going to have a look at all of the adjustments we made, the premium we collected, and we're going to have a look at our overall P&L on our positions and see where we stand on all our positions. So first things first, let's take a look at our Discord where we log all of our trades. Everybody can get access to this Discord. You'll be able to see what positions we're putting on and when we're taking them off. You can make money with us. So basically, the link for that will be in the description. So what we did was we placed a 0 DTE high risk SPX iron condor trade at the start of the week, and we collected $2.40. It is a high risk trade, and we only place these one at a time. We don't tend to overlap them. However, that position did expire worthless, and we kept all of the premium. It was a $5 wide iron condor, so there was $2.60 of risk, and there was $2.40 of premium, and we kept the premium. What else did we do? We also on Monday we rolled the short put up on UAL. So UAL, we have a strangle on UAL. So if we just take a look at UAL here, we can see we're currently at $50.22. This is our range. We rolled the short put up to the $42, which is here. So if you just take a look at the order chain, our original strangle was 35. Our strikes were at 35 and 50, which would have been here, down here at 35, and obviously the call side was the same. So we rolled our put from down here to up here, and in the process of doing so, we collected an additional 55 cents of premium. Our initial strangle netted us $1.10. We bumped our total up to $1.65. So that was a nice roll, and as you can see here, the position is just on the edge. It is slightly over, but it's fine. It's only just a little bit in the money. It's the price hasn't breached our break-even points, so we're not going to make any further adjustments. We're just going to let the market open and see where we stand on Monday. So that's what happened with the UAL. We closed a CMG strangle for 26.8% profit. So if we just look up CMG and have a look at the order chain, we don't actually have a position on right now on CMG. We just mocked up a position before, but this is the position we're referring to. We sold the original strangle for $1.08, and then we bought it back for 79 cents. We netted $29, and that worked out to be 26.8%. We did place a couple more 0 DTE high risk positions throughout the week. Two of them came in. Let's just see here. Two of them came in. Two of them missed. One of them came in, and then obviously we had the one at the start that came in as well. So about even on the high risk stuff, which isn't too bad. Actually, just slightly in profit overall, including last week's performance, which is when we started the 0 DTE, just slightly in the positive. Hopefully we can have a better week this week. So let's have a look at what else we did. We closed the LUV strangle for 24% profit. Let's have a look at LUV. We don't have this position on anymore, but this is what it looked like. We had a position on. We sold a strangle for 87 cents and bought it back for 66 cents. Netted $21. That worked out to be about 24% profit. That was a nice little trade. LUV behaved quite nicely, and in hindsight, might be nice to still be in this trade, but we do already have a position on UAL. That's why we cut LUV a little bit short, but there definitely was still some more money on the table there. We also closed a strangle in the Australian futures, the Aussie dollar futures. There is a contract multiplier of 100,000, I believe, off the top of my head for the Australian dollar. Um, it worked out to we netted $40 on that trade, which was 18.2% profit. We actually exited this trade pretty early. There was actually 100 days on the contract when we opened the position. So relatively speaking, we made quite a nice return in a short amount of time. That's the goal with the future stuff. As you can see, we are out of all futures positions now. So that was a nice little profit. And what we're going to do now is we're going to have a look at each position and see where we actually stand. Because as you can see here, there is quite a lot of red, but Tasty Trade calculates things in a bit of a weird way. So we're going to have a look, go over everything and have a look at what a true P&L is on each position. So if we take a look at UAL, we still haven't breached our break-even points. Um, Hopefully, we can get a little retracement come market open. So if we have a look, we are in the money on the call side. And as we can see here, this is our mark price. Mark price means this is what the current price would be to get out if we wanted to get out right now. Obviously, market is closed, but just before market closed. And so the difference between that and that is basically what this is. Obviously, there's a 100 share multiplier on each contract. And so with UAL, it is a naked position. It might look scary. However, there really isn't anything to worry about too much. We've already made an adjustment, and we're just going to see how things play out. As we can see here, our P&L is negative $161. But for whatever reason, it says negative 209. Since we've made the roll, for some reason, Tasty Trade doesn't calculate the price in the same way, I guess. But there we go. Our true P&L for UAL isn't negative 209, it's negative 161. Let's have a look at GDXJ. As you can see, it did gap up. Hopefully, we can see the market fill these gaps. Of course, if it doesn't, we can always just manage risk in another way. Again, we haven't breached our break-even points on GDXJ either. We did roll GDXJ earlier on, and we are currently down on the position $126, not $169. As can be seen on the dashboard. With SMH is an iron condor. It says here that we're down 127. We're not. We're down 69. We did make a roll. If you wanted to get out of this position right now, it would cost us $2.69. However, we have collected $2 up front in total, so our P&L is only negative 69, not 127. But if we have a look at SMH, everything is fine. We did make the adjustment. We did make the roll down. And as we can see, we are pretty much in the middle of the range. Volatility is contracting and there's nothing really to do except let theta do its thing and let time decay into the value of the contract a little bit more. SMH, beautiful position. AMD is a similar story, similar to SMH. As we can see with AMD, it says we're down $97. We're not. We're down $37. This is our mark price to get out, $2.37. We've collected a total of $2. So AMD, very similar story to SMH. Next up, we've got mRNA, another iron condor. We did get an opportunity to actually exit here. However, I thought price would continue higher a little bit. We hadn't actually reached our profit target. That's why I didn't exit the position. But there was an opportunity to exit. I believe we were in about a 30% profit. And then unfortunately, market just gapped down, and then gapped down again. However, we did see some upward pressure before the market closed. So hopefully, we could see a bit of a gap fill on mRNA. We'll be able to get out of that in not too much trouble. I don't believe we've made any adjustments to mRNA. No, we have not. So we are down currently negative $46 in that position. Nothing to worry about. Intel, nice strangle. We are in 22% profit at the moment. We probably will let this play out a little bit more. We can see volatility starting to contract now, so hopefully we can see a continuation in that contraction, and then hopefully we can get a chance to exit with a bit more meat on the bone, although we could get out now, but I think we're going to hold on for a little bit more. And that's basically our portfolio. Everything seems to be working well. And we're just going to keep managing our positions and keep managing our risk. We do have a position managing template for you that you can get for free. Obviously, it doesn't matter what you do. If your position sizing is wrong, you will end up blowing your account eventually. So we have a position sizing template here, and the way it works is you enter in your portfolio size. Let's say if it's $7,000, and then you enter in the current VIX level. Let's say if it's at 16.1, everything below will be automatically calculated for you. All you now need to do is just use this information to structure your portfolio, use it to form the backbone of your portfolio, and you'll be all right long term. You'll do just fine. Everybody can get a copy of this. Click the link in the description and then click on the free position sizing template, and then we'll send you over your free template. Also, if you want to get access to the Discord group, if you want to be involved on our trades, follow our trades, you can do so inside EDS Premium, link in the description. Inside EDS Premium, you will get obviously all of our trades and all of our portfolios, large and small portfolios. We do have a full course inside as well, so no prior knowledge is required. You can learn and earn at the same time. You can speak with like-minded individuals and also with myself. There is also a 100% money back guarantee. So if you've studied all of the content and followed our trades for 6 months and haven't been profitable, then we'll work with you for free until you are, or you can request a full refund. So it's completely risk-free on your part, and right now it's £1 a month. The price is going to increase. However, whatever price you get in at, you are locked in at that price. You will never need to worry about any price increases unless if you cancelled and joined back. So take advantage. You are rewarded for getting in early, and I'll see you on the inside.